If you think about global sports, you're really looking at a multi-billion-dollar business. And it's all built on, well, perpetual loyalty. Now, imagine tokenizing that loyalty. I don't just mean for bragging rights, but for actual financial assets.
Right.
That's essentially the core mission of Chiliz, or CHZ. It's this specialized layer 1 blockchain that's trying to drive the convergence of fandom and finance.
And what's so fascinating is the timing of it all. CHZ just climbed back into the CoinMarketCap top 100 in early 2026.
Yeah, we've all seen the charts.
And while, sure, the upcoming FIFA World Cup is a huge catalyst, our mission for this deep dive is to look past the trading hype.
Oh,
We're going to get into the institutional strategy and the tech that actually makes this, a compelling investment case.
So let's unpack the fundamentals. Chiliz chain calls itself the world's first layer 1 dedicated just to sports and entertainment.
Right, and architecturally, it's EVM compatible.
Which is key. It means it speaks the same language as existing Ethereum developers and tools. That ensures liquidity, access.
Exactly. It also uses a unique consensus mechanism. Proof of stake authority, CHZ.
So what's the main product coming off this chain? It's the fan token, right?
Yes. Managed primarily through socios.com, and they have, over 70 top global teams?
Including some huge names like FC Barcelona and Paris Saint-Germain.
And for the fan, the utility is pretty clear. You get voting rights on minor team decisions like walk-up music and access to VIP experiences.
And that POSA model, how does that create stability?
Well, it means the validators securing the network are trusted, known entities. We're talking major exchanges like OKX and even teams like PSG itself.
So it's like a proof of reputation guarantee.
It is. It ensures integrity.
But I have to ask, does having these huge centralized entities as validators sort of compromise the decentralized nature of the chain? Or does it just make it more appealing to institutions?
That's a great question, and it definitely leans toward institutional appeal. In this context, they're prioritizing stability and reputation over, say, maximal decentralization.
Yeah, because they're building for corporations.
Exactly. Having known entities validating the chain just reduces that counterparty risk.
Okay, let's pivot to the thing most scrutinized by serious money, tokenomics. I was reading about Tokenomics 2.0, which came from the Dragonate hard fork in May 2024. Can you break that down for us?
Yeah, that change was absolutely critical for attracting long-term holders. First, they brought in a decaying annual inflation rate.
Okay.
It starts high, around 8.8%, but then it stabilizes much, much lower at 1.88% after 14 years.
And what about the fee burn?
Crucially, they integrated a perpetual transaction fee burn mechanism, which mirrors Ethereum's EIP 1559 model.
So think of it like taking a slice of every transaction and just poof, taking it out of circulation forever.
You got it. It applies continuous deflationary pressure.
And what about those classic crypto risks, like the vesting schedule? Any hidden bombs for investors?
That's the other huge selling point. The vesting schedule for all the early investors actually concluded back in 2022.
So no risk of those hidden VC unlock bombs you see in newer projects?
None. It makes the tokenomics remarkably clean. And that stability is necessary because their long-term vision, this Chiliz 2030 idea, is all about real-world assets, RWA tokenization.
Or as they call it, SportFi.
Exactly.
That RWA shift is the real game changer, moving from fan loyalty to investment-grade assets. How does their European regulatory status play into that?
It's their competitive moat. They have MiCA authorization in Europe.
And that lets them partner with firms like Etc. to create compliant sports securities, things like tokenized revenue share notes tied to broadcasting rights.
Yes, MiCA is the legal framework that makes these offerings legitimate and safe for institutional capital. It sets them apart completely from the unregulated digital collectible space.
Okay, so we have the fundamentals. Let's talk momentum. The 2022 World Cup saw CHZ surge almost 380%.
It did. And current on-chain metrics are showing a really strong holder retention rate. It's about 97.62%.
Which suggests conviction. It's not just short-term speculation.
And this all leads directly to their next big focus, the U.S. market.
Right. They paused U.S. operations in 2022 because of regulatory uncertainty, which was a smart move.
It was. And now they're strategically re-engaging with U.S. regulators and the major leagues, the NBA, the NFL. They've earmarked a significant fund, between $50 and $100 million, just to rebuild those relationships.
So they can bring the American Big Four into the SportFi era all ahead of that 2026 catalyst.
That's the plan.
So to sum it all up, You have a specialized layer 1 with clear utility. You have clean tokenomics with no VC risk. You have established European regulatory compliance with MiCA and a massive U.S. market reentry plan tied to a proven World Cup catalyst.
Which leaves a really important question for you to think about. If Chiliz actually pulls this off, if they successfully tokenize sports revenue streams and team equity as true RWAs, will its utility token, CHZ, become the de facto financial plumbing for the entire global sports economy?
Or will the regulatory hurdles, especially in the U.S., ultimately limit that ambition?
It's a big question. And it's certainly worth researching their upcoming technical roadmap, like the Snake 8 hard fork, and looking into their dual token economy with the community token Pepper to see where this is all heading.